Joining us right now on the markets, Chief Investment Officer of Moneta, Aoifinn Devitt. Good morning to you. I think we're all trying to make sense. We got a bunch of earnings reports this morning, but I wanted to start with this. I don't know if you saw Bill Ackman went to Twitter. He says there's too much risk in the world these days to remain short bonds at current long-term rates. And he says the economy is slowing faster than recent data suggests. You've been more optimistic. Can you square those two ideas together?
Yeah, I can definitely square the idea around why one would stop being short bonds. It does seem that this rally that we saw in Treasury yields came out of nowhere. It didn't really seem to reflect the somewhat risk-off sentiment that we were expecting to see. And we generally see people take safety in bonds when there's risk-off. We had that geopolitical surprise, and that was certainly what we were expecting. And generally, bonds are seen as a safe haven. So that sell-off in bonds wasn't reflecting that. So there definitely was perhaps an exuberance of excitement around the economy that was not reflected in the risk-off trade. As far as, yes, I am optimistic, though, on the state of the economy because of the resilience that we're seeing in the consumer, as well as strength in the employment market, and the fact that earnings coming now are expected to be quite positive for the third quarter. That doesn't mean that there are a lot of rumblings underneath and transmission effect of interest rate rises that have not yet been seen in the economy. I firmly believe we haven't seen anything close to what we're going to see there.
We've been having conversations all morning about what's happening in Israel, and I'm just so curious how you think what the risk of that spreading is and what the risk of that is, dare I say, to the markets.
Well, of course, the humanitarian tragedy is first and foremost. When it comes to geopolitical risk recently, though, it hasn't really tended to affect markets that much. There is that brief moment of uncertainty. We saw that in the oil price. We see that when we just see markets less engaged, perhaps in the financial fundamentals and more focused on the political headlines. But that is very short-lived. There is simply too much money on the sidelines looking to swoop in for any opportunity. I've talked many times about the large balances in money market funds. And for that reason, I think we're in a different paradigm now when it comes to how geopolitical events affect the region. They tend to be quite localized and they don't tend to affect the broader stock market. As to whether, though, I do think that the fact that nobody anticipated this action, it was a surprise. We're adding that to the wall of worry. We still have the Ukraine situation. Winter's coming. We're still looking at the effect that might have on energy prices. It could be that this is just one surprise too many, certainly if it does escalate in the region. So far, it doesn't look like that's likely to happen, but certainly that is where we are watching very carefully.